Hi, everybody. It's Jessica Stone at Stansberry Research, and I've reached Kim Iskyan in Singapore. Of course, he's our international editor. And Kim, you've been writing about Brazil, which, of course, is the ninth largest economy in the world and also has just become the #2 leader in the world for coronavirus cases. We've seen President Trump in the United States ban Brazilians from coming into the country because it's so bad there. Let's talk about, first of all, your thoughts on how Brazil's economy plays into the commodity market and what people in the United States might see as a result of the problems there right now.
Well, Jessica, Brazil is the second largest country in Latin America. It has about 210 million people. It's the largest by GDP of all Latin America. So it is a big player in the entire region. And what happens there affects everywhere from Mexico to Chile. And Brazil is the largest producer in the world of coffee, of orange juice, of sugar. It's the world's 10th largest oil producer. And when we see economic instability there, that can really ricochet throughout the commodities markets, especially in those commodities in particular. And what we're seeing right now in Brazil is, on the one hand, you have COVID-19 and all the repercussions of what looks to be massive incompetence in the management of that. And then you also have the president, Jair Bolsonaro, who is coming under a lot of fire, and there's a real risk that he will be indicted and potentially impeached, which would throw everything up in the air in a huge kind of way.
Yeah, something which Brazil, of course, has seen pretty recently with the impeachment of a previous president, Dilma Rousseff. I wanted to follow up with you about the commodities angle there, because obviously the Chinese buy a lot of products, especially oil and soy from Brazil. We've been watching the recovery of China very closely because it has a lot of implications for the global economic recovery. What could happen there? I mean, what are the implications for China's recovery if Brazil really goes downhill quickly here?
Brazil is a huge producer of soybeans, and China gets around half of its soy from Brazil. And soy is used predominantly for animal feed, and Brazil was a huge beneficiary of the US-China trade war because China used to buy more soy from the US, and then everything went downhill there. So Brazil became a critical supplier. Now, if coronavirus worsens dramatically in Brazil, and you have, for example, truckers who fall ill and can't truck the soybeans to the ports, then we may well see a spike in prices, and then we may see, well, certainly lower production, certainly lower supply that arrives to China, and that may well impede the recovery of the agricultural sector there, because if you can't feed the animals, then you're in trouble. So yeah, it's one thing impacts another. It's the butterfly wings sort of situation here, and we're really going to see that in Brazil, I think.
We always talk about emerging economies and emerging markets and investing in them. What are you seeing in terms of that? I mean, do you think people are already probably having a little more caution in terms of emerging market investing? But of course, that's where we can see the growth. What are your thoughts on that, especially in respect to the currency? Because we've seen a lot of changes in the real and its value in the last, let's say, year, but then more recently, coronavirus has had a huge impact. I think it's down to something like 5 to the dollar right now.
The Brazilian currency is one of the world's worst performing. I think it's fallen from 4 to like 5.5 or something just recently, just in the past 5 months, which is huge. And also the stock market is down about 50% in dollar terms. And that's a function of, a lot of things. The president wasn't delivering on a lot of his promises in terms of reform, tax reform, pension reform, privatization. So last year, there was already a lot of doubt about the direction of the stock market and whether it was overvalued. And now we see the IMF is forecasting Brazilian economy is going to contract by 5+%, and massive political instability, so many question marks. Arguably, it's setting up to be a great contrarian play, just because what else can go wrong and that sort of thing. But for every great contrarian play, there is a too early play or a just plain bad idea because everything is going to hell in a handbasket kind of play. And I have a feeling that that'll be the case for Brazil for a while longer, because there's so many, whatever the opposite of stars aligning is, that's what they're doing. So I think that in terms of investment in Brazil, I think now is not the time. But there will be a time when everything's priced in. And we may come to that time sooner rather than later.
All right, we know you'll be watching closely. Our thanks to you, Kim Iskyan, there in Singapore. And if you would like to see more content like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and on Twitter. Thanks for watching. That's all for now.